Okay, we're going to talk about church tax and finances, part one. Part one, we're going to start with charitable contributions and go over the 6 requirements for charitable contributions a bit later, and there's some advantages of doing property gifts. Obviously, it's got to be in the year that the contribution was made for it to count as a contribution for that person. And we've had people come into our church, I know, that came in January and said, well, if I backdate my check, can I get that as a contribution? And you basically just have to tell them, no, it's got to be in the year made. You know, they need to, turn the check in before the end of the year, not wait and see what they have. And then unconditional without personal benefit of the donor. Basically what they're talking about there is I can't give something to the church and get some type of benefit about it. In other words, I can't give to the church to fund a scholarship for camp for my son. I got a personal benefit out of that. So I can't give anything that I get a personal benefit out. I basically have to give the money. It's a unique concept, but you got to make sure you are giving it, not just funneling it through the church. And then 4, made for the use of a qualified charity. That's pretty similar. Basically what you're doing is saying, I'm turning it over to the church to make a decision on. An example I like to use on that is benevolence. A lot of times we'll have some need come up to the church that this person needs some benevolence or some help from the church. And then they want to set up the benevolence fund and just write a check to the church for this person. That is not a charitable contribution, any different than if I just wrote a check directly to that person. I can't just run it through the church and make it a charitable contribution. It's got to be for the church. Now, what I can do is I can have a benevolence fund in my church and I can give it to the benevolence fund. Then the church makes the decision if I help that person or I don't help that person. See the difference? I gave it for the use of the church. The church is making the decision. I'm not making the decision as an individual who that money goes to. So that's really the key on that one. And that's where you run into, seems like, more things. And then allowable limits. This doesn't impact you when you're receiving the gift, but the people giving it, there are allowable limits. On cash gifts, it can't exceed 50% of your adjusted gross income. On appreciated giving gifts, it can't exceed 30% of your adjusted gross income. Now, when I say it can't exceed that, it just means you can't get a current year deduction for that. Anything that you would give over and above that can be carried over for 5 years. And you might not think that happens a lot, but in our tax practice, we had several people that would make contributions and carry it over for several years, especially if they did appreciated giving, where they may have done a large gift in 1 year, then just used it up over the 5-year period. So that can happen. And properly substantiated, we're going to talk about that a little bit as to what is properly substantiated. That just basically means the church has to give information to you that you made that contribution. Pretty much everybody has the contribution records they receive and at least lists the detail of the contributions and stuff. That's properly substantiated. If it's a non-cash gift, then basically you just acknowledge what you received, not the dollar value of it, but what you received. Dollar value allow the person that gave it to make that determination. Don't become an appraiser at the church. Okay? Now, personal services are never deductible. And you'll run into this time and time again where people will say, well, if I do your heating and air work, can you write me a contribution receipt for that? No. I mean, you could write a contribution receipt if they provided materials, but for his service, no. That is not deductible. And similar to that, rent-free space cannot be claimed as a charitable contribution. So if someone had some property that they normally rent out, but they said they'll allow the church to rent it or use it for free, then that is not a charitable contribution either. And if you think about that, it doesn't seem fair until you back up a little bit and say, well, if I had rented it and then gave that money to the church, I reported income, then I got a deduction for the charitable contribution. By just giving rent-free space, I don't report it as income, so I don't get a charitable deduction for the contribution. So it washes out really kind of the same. So there's not really an advantage that you would give on that. Okay. Gifts over $250. This is where you've got to have written acknowledgement required. And that's where I say the receipts papers that we send out at the end of the year at the church, that qualifies. And you're supposed to have that receipt prior to filing your tax return. So we always encourage churches to make sure that you get those receipt information out to the church members as soon as possible so they can file their tax returns on that. There's a statement that we'd like to have on there. It says value of goods and services provided, or a statement as to that no goods and services provided, such as donor receives solely an intangible religious benefit. Now, when you do provide goods and services, basically that's quid pro quo. Basically, what they're saying is that I gave something and I got something in return for that. So when I do that, I'm supposed to tell them what the value of what I got in return. So if I charge $100 for a meal and the meal's worth $20, then I just tell them that of their $100 contribution, $20 they got value back and their deduction is $80. So that's really all that is just what the value of that. You can see on here there's some de minimis rules that if the church, church name on t-shirts or logos having cost less than $10.90, and if the value doesn't exceed $109, and these are adjusted annually for inflation. That's why they're kind of odd amounts. They just kind of go up as inflation goes up. All right, let's talk a little bit about non-cash contributions. Non-cash contributions are a little more stringent than cash contributions. Obviously, for a reason is because of the value of what I'm giving. Cash, you know what the value is. Somebody gives you $10, it's $10. Somebody gives you a washing machine, what's that washing machine worth? Or a piano or something. There's a value that has to come up with. And that's where I'm saying you don't come up with the value, you allow them to establish the value. I've got a orange sheet in here that basically is just an example of what I feel like you should give to the person that's giving the gift. And basically it's just acknowledging the charitable contribution on the date and what the gift was. And in this one, a 1990 Maytag washer. That's probably got a lot of value, doesn't it? Need to probably update that date maybe. But anyway, just say it's in good working condition. And that's really all you're telling them. You're not telling them what that value of that machine is worth. They make that determination when they file their tax returns. And that's not a responsibility that you would have on that at all. So, again, the biggest thing is don't act as an appraiser unless you're willing to assume the responsibility of providing the stated value. Now, if the gift is valued at $250 or more, then you've got Yeah, 250, it's the same as cash. Again, don't state the value, just a description of the gift. More than 500 or less than 5,000, then there's some more filing requirements on that. The form, it's a yellow sheet in here, 8283. If it's more than 500 and less than 5,000, basically they need to complete the first part of this gift, or the first part of the page 1, which basically they just give the name, organization, the date of the contribution, how they got what they gave, how it was acquired, their cost in it, and the fair market value that they're going to determine, and then they're going to file this with their tax return. The church really doesn't have anything to do with this other than the acknowledgement that they received the gift. They don't have to fill out this form. Okay? Now there's different rules for motor vehicles or airplanes or boats. IRS had kind of feels like when they give automobiles and stuff, people were just looking it up on Blue Book value and saying that's the value of the car if it was there. Some of those cars were pushed into the lot to give to the church and didn't have that value at all. So what IRS has come up with is a form 1098C. And again, we're not establishing values, but basically we're going to look at what they have, what they gave, the year, the make, the model, identification number, and that they gave that information to the church. And you note on here as to whether the church is using the vehicle or if they're going to sell the vehicle. If they sell the vehicle, that's the time you use the value. If somebody gives the church a vehicle and they turn around and sell it, then that becomes the value that they're going to get for their tax return, and that's where you put the value in here and the date of sale on here. So they're limited to what the church actually got out of that vehicle. So there's no more, it's worth $5,000 and the church got $50 salvage out of it or paid $75 to have it all away. Okay, so that's what that form is for. So there's a little more stringent on vehicles, boats, airplanes, and such. Now, if we get over $5,000 or more, it's the same form, 8283, except now we're looking at the back side of that form. And this part, the church does have a little bit of involvement in, not a large amount of involvement in. But if it's over $5,000, they're required to give an appraisal on what they gave. Okay? So again, they list the information that they're required on the top of the page as to what was given, appraised value, market value, and all that. And then the second part, or part 3, is the declaration of the appraiser. They had to have it appraised. They have to have the appraiser sign it. You might not necessarily see that because the part that you're going to sign as a church is part 4, which is the donor acknowledgement. And basically on the donor acknowledgement, you're just giving the church's information, ID number, and that you acknowledge that you received that gift. Okay? So that's really kind of the extent of what you've had on that, is signing that form at the bottom. Now, if you turn around and sell that appreciated property, then you have an obligation to file a form 8282, I'm sorry. And that form is basically just information as to I received this property and I subsequently sold it. I believe it's within let's see, 3 years. So if I sold that property within 3 years, then I fill out this form to tell IRS what I sold it for. So then they go back and match it up to what was filed with IRS to see if it's within a range there. And it doesn't mean that if somebody gave you a piece of property that was worth $100,000 and 3 years from then you sold it for 80, that they're going to lose that deduction. They have ranges they accept on that they don't necessarily just automatically change that. Now, while we're talking about that, let's talk about why would somebody give appreciated property. If I have appreciated property, what I get is a deduction for the fair market value of that property. I don't have to report anything over and above what that property's value or what my basis in that property is to that fair market value, but I get a deduction for the fair market value. An example I have is we had a client that had multiple rental properties, and he decided he was going to get out of the rental property business. And so what he decided to do, and he always gave to the church very handsomely, more than his tithe, that he would give a rental property away to the church every year. Most of the rental property he had been almost fully depreciated, which means his basis in the property was small, maybe $1,000, for land value when he originally bought it, and maybe worth $100,000 now. So he gave the property to the church, and then the church sold it. They got $100,000. On his tax return, he reported a $100,000 contribution. No gain on the sale of the property. Had he sold the property, he would have had a $99,000 gain that he had to pay tax on. Then he would have got a deduction for whatever that he gave to the church. So it's a huge advantage if you've got appreciated property to give that property and allow the church to sell it or the charitable organization to sell it. And that's the advantage of having that. And that's the one where we're talking about you're limited to 30% of your adjusted gross income on that one because of that advantage on that. So that is situation that is overlooked in a lot of cases that, I think that we could promote that in our churches and benefit, our church members and the church. In this particular case, it benefited both. He obviously, what he ended up doing is actually probably giving more than he would have given for the value of the property, but his tax offset was so much difference that it didn't make any difference. Now, another area I want to talk about on charitable contributions is what they call a charitable or a qualified charitable distribution. All right, if you have any member in your church that is over 70 and a half years of age, okay, anybody have any of those? And they have an IRA, and they pay tax, if they use this qualified charitable distribution, they can save money. Basically, when you get 70 and a half with an IRA, you're required to take out of the IRA based off your life expectancy on that, okay? And but also when you're 70 and a half, you can use this qualified charitable distribution, and it counts against the amount you're required to pull out, but you don't have to report it as income. So it just goes directly to the church. They have the contribution. It's never reported on your tax return. It's, a win-win. Church doesn't cost the church anything. They get the same amount of money, but the person giving it doesn't pay any tax on it. So if you're in a, between federal and state in a 25% tax bracket, and you give $10,000 to a charitable, qualified charitable distribution to the church, which means you just went directly from the IRA to the church got $10,000. You don't pay tax on the $10,000, so you save $2,500 in taxes just by having it go directly from your IRA to the charity. So, to me, that's something that we need to pass on to people, because probably a lot of people don't know about that, and it's just a significant savings. And again, when people save significantly, they may give more to the church too.
And that would just be on the donor to go through their third.
Yeah, basically they just contact. Yes, they just contact whoever manages their IRA and just say, I want to make a qualified charitable distribution. They would take that, the person that manages it, write a check directly to the church, and church, they usually come with a letter from the IRA provider saying this is for, from X individual. It's probably a good practice once you get that just to acknowledge it to them that you received it and appreciate the gift, but you don't report it in their giving records because they don't get a charitable deduction for it, but they didn't have to pay taxes on it to begin with. And where that's really important now, even more so than it was in the past, with what they've done with the standard deduction, you no longer have exemptions, but they've combined the standard deductions and the itemized deductions, which is, once you're over 65, can be like on a married couple, $25,300 standard deduction. Well, if the only reason I was itemizing is because I had contributions that put me over that $25,300, I'm going to get the $25,300 anyway as a deduction, because that's the standard deduction. So if I can use qualified charitable distributions, and now my itemized deductions, instead of being $26,000 or what they were, or more like $16,000, I get a deduction for $25,000, don't have to report $10,000 on what I gave. So I, in effect, get the deduction by doing the qualified charitable distribution. It's an amazing.
Can you do that, is it just a once a year? It's like you can contact and do.
You can do it every year, and it can't exceed $100,000. Okay, is the only thing. But you can do that every year that you're over 70 and a half.
I was just thinking, people that give every other week or once a month, and then if they waited until the end of the year, and then we're like, here's this check.
Okay. Okay. Okay, I'm sorry. When I say they can do it once a year, they can, if your IRA provider will do it for you, they can write a monthly check to the church. And a lot of that would depend on how much you're giving and how much paperwork that's involved for that provider. But as long as the provider will do that for you, they can give it on that. Yeah, and if they're only going to do it once a year, I would probably encourage them to try to do it at the beginning of the year rather than the end of the year. Now, one of the things I might point out on that is where this says over 70 and a half, in the year I turn 70 and a half, I'm required to take minimum distributions out of my IRA. So anything that I take when I'm 70 but not 70 and a half during that year qualifies for my charitable my qualified or my required minimum distribution. Anything I take out when I'm 70 prior to 70 and a half qualifies for that in the year I'm going to turn 70 and a half. But if I make a qualified charitable distribution, it actually has to be after I turn 70 and a half. So I can't, if say my birthday's in January and I turn 70 in January, which means 70 and a half, I'm going to be June something or whatever, that's when I turn 70 and a half. I can take out my minimum required distribution anytime those first 6 months, but I can't use this until I get past that 70 and a half number. Okay, so that's a very significant thing. And like I said, with the higher standard deduction, it's an amazing benefit that we can use now. Okay. Anybody have any questions on charitable contributions?
One question that's been brought up to me sometimes, if somebody gives you a receipt, a church member gives a receipt, so it has the value of what they spent, you still should not put the value, it's still considered a non-cash
Yes.
gift.
Yeah, you don't acknowledge the value they have on that.
Don't record it on
Right.
your
You can just say,
statement.
what it was and whether it was in good condition or not. When you say a receipt for like what they paid
Like
for,
they went to Walmart and bought notebooks for,
okay,
something.
that's really similar to a cash gift.
It
So
is-
yeah, you could just, if it's a receipt where they actually just bought something that's going to be used in the church, you can just put that in with your cash gifts. What we're talking about here is items that they've had a while that value would change. But if it's just buying supplies for the church, that can qualify as a cash gift, and you can just include it in their contribution records.
Okay, 'cause I heard differently.
Okay. Yeah, there's no reason not to do that. Again, you want to keep that receipt with your records. It'd be no different than if you reimbursed them, then they turned it around and gave that in cash, because there's no appreciation or depreciation on what they bought.
So like somebody gave stamps, they bought stamps in their ministry, and so they turned the receipt in, you could include that as part
Yes.
of your
Mhm.
cash gift.
Yes. Matter of fact, we did that this year at our church, is that for the stamp prices went up, somebody went out and bought a bunch of stamps and gave it to the church. And
So is that the responsibility of us to go ahead? Because I was just trying to picture us. If someone gives this, you have this receipt, and they give you cash, then to get it to our registrar, to get it into a church record keeping system, at least at our churches.
yeah, basically you just enter it just like you would a cash gift. Most of those places have where you can put a little notation as to what it is, and just keep the receipt that you have, just like with your other giving records, envelopes or whatever, and just keep that with that, just so that you have backup for that eventually. But again, like I said, that's more of a cash receipt, rather a cash contribution, rather than what we're talking about on other gifts, property gifts. Okay.
Your washing machine, if it's a newer washing machine though than what you had, on your non-cash contributions, if it's under 250, you do this. If it's more than that, but you're not making a decision on what's value is. So how do you know what?
Well, if it's Well, in reality, the 250 or the over 250, you just give them a receipt.
Okay.
Until you get over 500 and between 500 and 5,000, you don't really have anything else. And even then, you do as a church don't have anything. It's on the person making the gift.
Just one comment, especially about these qualified charitable distributions.
Mm-hmm.
That'd be a great article for the Baptist Digest. You have 5 churches in here. We have 400 churches that need to hear this.
Yes.
That'd be a great article for Baptist Digest.
Yeah.
I'm not sure what.
Becky, you could write that.
You write it, I'll edit it. Put it on Facebook.
I mean, that's good information, and our churches are full of people who are, you know, that's a lament of the church across the nation, is we have older people and we're trying to get younger people, but,
Mm-hmm.
so we have a lot of older people that fit in that category.
Yeah.
Yeah,
And-
the best way to present that, like, how would I get up and be like, hey, let me explain to you.
Yeah, and that's difficult because I don't know about your church, but our church, I don't know that many people even look at the Baptist Digest. I mean, it's pretty much online now, right? So would that information really even get out to them?
So we have several ways of putting, I mean, if it's just something brief, it can go on Facebook, it's,
But the 70-and-a-half-year-olds aren't, they're not following
Well,
KNCs on
yeah.
Facebook either.
that's true.
Yeah.
We're not gonna go on it,
Yeah.
My mom is 84 and she's not computer savvy, so she's not gonna go online to Facebook or to
Yeah.
a website. She wants it in paper form, so
Yes.
she can keep it with her records.
Mm-hmm.
That's just where,
Yeah, and I don't know an easy way to get that out to churches other than, take this back to your church and get that information out to the people in your church. But far as getting it to all the churches, we could, send out a flyer or something that they could put in their bulletin or whatever. But I don't know an easy way to necessarily do it that would do it. But I just think that it's a huge benefit that's setting out there that's probably not being used as well as it could be.
I wasn't aware of this. And this is incredible.
Yeah. All right, any other questions on charitable contributions? All right, let's talk about restricted designated net assets. We tend to call, when somebody gives something to the church, that those are restricted funds. And in reality, there's a couple of different, they're either restricted or designated. And the difference is, a restricted fund is something that I give to the church and I restrict it for a particular purpose. Lottie Moon, Annie Armstrong, those that I'm saying I'm restricting it for the purpose of giving it to the church. And it's passing on to, in effect, another 501c3 organization, so that would qualify. If I set up a building fund, that can be a restricted gift also. That means it's got to be used for the building fund. And if you notice on here, I say, if you do set up funds that you're going to use within the church, that you're going to collect money for, make a broad definition of it with time limitations or final dispositions. And the reason you do that is you don't want to be in a situation where you set up, say, a building fund, and then down the road, things change and I don't need the building fund, but I could use those for other ministries within the church. And in reality, I'm not supposed to be able to move that restriction to something else unless my definition when I set it up is broad enough to cover that. So what we say is define it broad, have a time limitation that we're going to raise money for this, and if it's not used for that, or if we complete the project, say you took a parking lot fund and you got the more funds than you needed to finish the parking lot. After that has completed, then you could move those to another ministry need of the church and not have them sitting in a parking lot fund that I don't necessarily need. Example I had is we had a church in town that was looking at, they were just busting the walls and needed to build a new building. So they set up a building fund and was collecting on that, but within the time period they had this building fund, one of the major employers left their small town and church rolls almost dropped in half. They were no longer, busting at the seams, and they had this significant amount of cash sitting in a building fund, but really couldn't use it because they weren't going to build with that. So if you define it broad and handle it to begin with, you're better off. Now, I'm not saying that if you moved it around, you would ever get into trouble, but it's just easier to tackle it up front. And the only thing that can really happen is if somebody reported you to the Attorney General in Kansas, he could come in and do that. He's not going to get into church politics, so he's not going to probably do anything on that. But where the biggest problem comes is relationships with church members. I gave this money to that. I want it for a building fund. I don't care if we don't need a building fund. I want it for a building fund. But if it's everybody understands it up front, then you can kind of avoid that problem. Okay, does that make sense? Because again, if it's restricted, it's only for restricted purposes. Now, we'll talk about designated funds. What's a designated fund? A designated fund is different than a restricted fund, but a designated fund can become a restricted fund. Say I've got $200,000 in cash reserves from my general fund that I have not spent for several years, and I want to start a building fund. And I say, let's move $100,000 over that into our building fund, and then we'll start accepting gifts from that. Well, the $100,000 that I moved from my general fund to that is not restricted. It was just a church action and can be reversed by a church action. But any contributions given after that becomes restricted. So I'm saying it can be a combination of both. And, you know, if it's a combination of both, you got to make sure that you maintain dual records if you ever want to change that, or somehow to keep it separated, or else it just all becomes restricted. Okay? So like I said, designated can be changed by action of the church, and again, future contributions to that could be treated as restricted and could make the whole thing restricted if you don't have adequate records to show the part that the church did and that. Okay? Now, another example I kind of want to give is when you're using contributions that are given to the church and they're going to, in effect, flow out to somebody else, like I mentioned on Lottie Moon, Annie Armstrong, that the church collects that and just pays out to somebody else. That's to a 501c3 organization, is not a problem. We had a group in our church that had a ministry for the homeless in Wichita, and they were collecting money through the church for this ministry, but the ministry was just this group together going out and feeding the homeless, and it wasn't a 501c3 organization. So the money, just because the money was given to the church and given to them, then that wasn't a qualified charitable contribution because it wasn't going through a 501c3 organization. It was going through one, but it wasn't ultimately going to one. Now, the way they could have handled that is if they made that a part of the ministry of the church and basically did, in effect, reporting to the church, and it becomes a ministry of the church, and then it's of the church. But they didn't want to have it with the church. They just wanted to do it on their own and just have it, funnel through the church. Well, then that makes it not a 501c3 organization, or makes it not contribution unless they went to the steps to get a 501c3 organization. So they had two choices to get a charitable deduction for that, for people that gave to that. One would be to form a 501c3 organization, give it to them, or give it through the church to them. But I think the plan was, well, if I give it to the church, then I get the contribution for it, and I use it over here. But you can't do that. It's got to be a 501c3 organization. That make sense? Okay. And Becky can probably attest, probably more than anybody, all the different questions you have on charitable contributions and the ideas people come up with. But the big thing is, stop and think about it. I'm giving it, and I'm giving up control of it, and I'm giving it to a 501c3 organization for their control. I'm not giving it that I get a benefit out of or that they don't really have control over. And there's nothing in the tax law that says it's for a worthwhile benefit. You see where they take up collections where you can make contributions to a bank for somebody that's going to have a kidney transplant or something like that. Those aren't charitable contributions. It may be a very worthwhile cause, but that doesn't make it a charitable contribution. Again, it's got to satisfy the 6 criteria that we have in there. So you just have to be aware of that when you're receiving contributions. Does it satisfy those 6 rules? And probably the biggest thing is, have I given up control of it, and I'm not getting any benefit out of that? Okay? So if like I say, youth camp, if I give it to scholarships to youth camp, that's fine. But if I give scholarships to youth camp for this person, then it's not fine.
What about giving to mission trips? different?
It's different on missions trips because the mission trip is actually a function of the church, and that in itself is a mission. I mean, it'd be sort of like if I paid for all my mission trip that I go, then that is in effect a charitable contribution to me because I'm doing it for the church. It's just like if I travel for the church, then that is a charitable contribution to me because I'm doing it for the church. I'm doing the mission trip for the church, not for a personal benefit for me. Now, if it's a mission trip that has mixed use, where they go on the mission trip and, they have 1 day of the mission and 4 days of partying at wherever they're at, then no. But if it's truly a mission trip that the church is sponsoring and putting out, then I think that would all qualify as a charitable contribution. Yes, ma'am?
In a church where we have a pastor, but he's part-time, and so being part-time, he doesn't get a full-time salary, so he raises support, and people send money to the church, being paid to the church, to help support him, so he can help pay utilities, buy food. That's okay.
Well, it is okay as if when you're reporting it to him, you're reporting it as compensation to him. It's just like a love offering. It can go two different directions depending on how it's set up. If it's truly a love offering, which I'm just giving to that individual and they're not reporting it as compensation to him, then that is not a charitable contribution. But if I'm giving to the church to support your pastor and you write that pastor a check and you include that in his compensation, then I think that would qualify as a charitable contribution.
So someone sends a check to the church, we turn around and give it to him, but he also has to report it as salary.
Yes,
Is that what you're saying?
yes.
Yeah, he
But I'm saying the
reports it on
church,
his taxes as
yeah, the
salary.
church is going to give him a W-2 showing that amount, just like the other part that's not.
Exactly.
Right.
Okay, so that's all good.
Yeah, I mean, it would actually be better rather than sending it in his name, just pastor support or something like that, and then making sure the church has the authority as to how much they pay him. Okay, so if a wild example of, say, you had a pastor who was part-time, like in your case, but he had this wealthy individual as a friend of his that put $100,000 in the church for the pastor. Well, the church may not say that pastor should be getting $100,000. Then I think that would make it a little grayer. But if I'm giving to the pastor's support and the church really decides how much I pay the pastor of that, then I think that makes it a lot clearer.
Yeah, because I'm talking about a pastor who does receive income, but it's a part-time income.
Yes.
So then he has to raise the rest of his support so he can, meet his
Yeah.
needs.
Yeah. It's sort of like we do with the campus ministries here, where they raise their support and then they're paid a compensation and it's included on the W-2 forms.
Right.
So like, say in October, Pastor Appreciation Month, we take up a love offering for the preacher. We gotta report that on a W-2 too?
If you want a charitable contribution for the people giving it, yes.
If they're just giving cash, and
Yeah.
you're just handing him the cash and nobody's getting credit,
Right. As long
We need to
if
count
you,
that as income, though.
Yeah.
From our perspective, even a love offering is counted as income. Even if you'll get a W-2, you need to count, just like funerals ought to be counted as income.
yes,
right?
yes, they would.
Love offering.
But I'm just saying, if it's truly, by definition, love offering, then that could be considered just a gift from me to the pastor, and that wouldn't be taxable to him. But normally, when you run it through the church, you want a charitable contribution for it, and therefore you want to include it as compensation to the pastor.
And you were saying, like, we had a child that we did, had to have some surgery, so we did, people wanted to give gifts to help fund some of the surgery. That money came through our church, and we had like a little designated fund of sorts for that.
Those would not qualify.
We should not be giving those people that as a contribution.
Correct. If it's set up to where it's going to an individual. But like I said earlier, if you set up a benevolence fund and you collect that to that benevolence fund, then the church decides how much I help that individual, then that's fine. A lot of it's just kind of semantics as to making sure that when I give it to the church, the church is in control of those funds, not me telling you that it's got to go to help this person's surgery.
So if someone, we get a call late at night, someone's got an issue and someone at the church goes over and just takes care of it, and receipts or anything else, that's just,
Right.
it has to be a direct church has to be a church, check from the church, from the benevolence.
Well, the church has to have control as to who's giving that benevolence. Now, say your example that the person that's went over there is acting on behalf of the church and has, authority to make those decisions, then, maybe he's obligating the church for that. It would be best if you just had a benevolence fund, and then, say in your particular case, that he went over and handled it, turned in the receipts to the church, and the church decided, yes, it would reimburse him out of the benevolence fund. I think that would qualify.
Because we have 2 or 3 individuals that are financially capable of,
Mm-hmm.
when there's a benevolence request, you don't call a board meeting, you know what I mean? Text each other.
Right,
and
but you can't. But you can still address it after the fact, if that's
after the fact.
after the fact. As long as the church is in effect, they become more of a reimbursement position at that point, and they're reimbursing him his expenses. If he turns around and gives that reimbursement expense back to the benevolence fund, I think that's fine. But in effect, what you're talking about is he goes over and handles it. He turns in receipts to the church. The church reimburses him out of that benevolence fund.
Yes.
Okay, then I think that would, he doesn't really have anything that he's going to deduct there other than when he contributes to the benevolence fund. But he can still do what he's doing and being reimbursed those expenses. Does that make sense?
Along the same line though, Darrell, if there's if a church has a benevolence fund, but there's a project that exceeds that, there's a needy family, the roof is falling in, and the deacons have met, they said, we can't do this, so we have to put some effort into this, and they said, we need to raise some money and we have this project ahead of us. People can't say, well, we're giving this so they can get that roof fixed.
No, but they can give it to the benevolence fund knowing that's what they're going to do with it.
All right.
Yeah. If you sit there and say, we've got this amount of money in the benevolence fund, we really want to help this family over here, but it's going to take this kind of money, and they raise that money for it. Because in that case, if you collect more than you need for that roof, that stays in the benevolence fund and can be used, and the church is making the decision, not the individual.
Okay, you just can't say for so-and-so's roof.
Right. Yes.
Do a separate spreadsheet to roll out your benevolence fund.
Well,
If you are that specific.
but not really, because if you just have a benevolence fund and you pay things out of the benevolence fund by whoever's in control of that church, you don't really have to keep what individuals it goes to. You're just paying out of benevolence fund. And matter of fact, you probably don't want a lot of disclosure as to who the church is necessarily helping on different benevolence items. Okay. Okay. Other questions? We got about 10, 12 minutes left. But that,
On the original thing, it talked about part 1 and part 2.
Yes.
On the new one, it didn't do that. Are you still doing part 1 and part 2?
yes, part 2 will be the second one that I'm doing at 11 o'clock. And what we're going to cover on that, I can tell you real quick. We're going to talk about difference between an employee and independent contractor. We're going to talk about making sure you file your annual report, wage and hour, property tax, sales tax, unrelated business income, and those items. More of administrative type things within the church.
Another quick question. We have a mission trip every year. They go down to Angola prison. It's part of our water ministry. We send 4, 5, 6 guys down who can make it. They go down there for the weekend, basically. So when they do it. Those guys always want to do a chili feed or something to raise money. Anything given to that chili feed is not deductible either, from what I'm hearing, correct?
Well, no, it would be on a mission trip, but that's where.
We're getting, but I've been arguing with them every year. They're getting, if they weren't getting anything from it, they're getting.
Yeah,
food.
yeah.
Okay,
That's where you would have the part where we talked over about good faith estimate of the goods and services furnished. So if you have a chili feed and they're giving money to the chili feed and they give $100 for this bowl of chili, then the value of that bowl of chili has to be reduced from that $100 that qualifies as a charitable contribution. Okay?
So the best way for me to tell everybody coming to chili feed is bring cash, so I don't know who it came from, right?
Well,
Then I'm not up to.
well,
I mean, just messing
I mean,
with
but I'm just saying you could at the chili feed have some pre-printed vouchers and just have determined that a bowl of chili is worth $10, and then when somebody turns that in, you just or gives you money for it, you just put on there what they gave and what the value of the bowl of chili is, and give it to them, and you've satisfied your deal. Or you can just take it and not report it. But I'm saying if they want a charitable contribution for it, that's the way they really have to do it, is have to get that value of that bowl of chili back in there. You know, our church raises money for foreign missions, and they have an auction each year, and some items on the auction go more than the item is worth, and so they have a charitable contribution. But it gets really difficult when you've got like handmade things as to what the value of that is. So you kind of have to make an arbitrary good faith estimate as to what that value is. We've had some where they've gotten gift cards from people, and sometimes they sell those gift cards for less than what the value of the gift card. Well, obviously there's not a charitable contribution for that, but if there's amount over and above what that gift card's value is, then they should get a charitable contribution for it. It's just once you do things like chili or a craft item that you sold, then it gets really difficult to do. But that's the way you have to do it to get that charitable contribution. You got to take that value out of what was given.
So what you're saying is we really need to have those pre-printed contribution receipts at the time we're do it. Like our church does Indian taco sales,
Yeah.
and we usually sell them for $6.
Okay.
And that includes the taco and the drink. And they give us a $20 bill, and they go, "Oh, just keep the change." So we would write that they gave us 20.
And then just have it pre-printed on there that it was $6. Yeah.
And,
Yes.
And we give it to them at that time.
Yes.
Okay.
That'd be the easiest way. You've given them their contribution records, and you don't have to sit there and try to fool with it in your big church records. You just give them an individual and let them keep that for the end of the year.
And does that maybe need to be printed on like church letterhead?
Just as long as it's on there that it's from the church, or,
Okay.
I think is all you'd really need on it.
But we need to do it at the time we're having
I think that'd be the easiest way to do it. I mean, you could, but I just think you could do it later, but I just think it would create a lot of work where if you could just give them a sheet of paper with what they gave.
Yeah, it creates a lot of work for our treasurers.
Yeah. I think, to me, that would be the easy way to handle it. Any other questions? All right. That's all I have, unless you have some more questions.